Okay, let's continue with our next speaker, and our next company is Mako Mining. Welcome on stage.
Good morning, everybody. Today I'm going to talk to you a little bit about Mako. Before starting the presentation, I wanted to let you know why Mako is different from some other companies. First of all, we're a small company, although we have the ability to engineer, procure, build, and operate mines. We hire our COO and his entire EPCM crew to run the company, so they are able to capture opportunities and quickly monetize the opportunities. We have an in-house EPCM team, which is not common for a small company. Big companies, sometimes they have their in-house people, but we as a small company have our own EPCM firm. So we were able to build our first mine during COVID in Nicaragua with hurricanes and at the same time. So it was a very complex situation, but we were able to build it thanks to our in-house EPCM team. We are also, because of our size, we're very flexible and we have low bureaucracy. So if we really like something, we go for it. And the proof of that, I'm not just saying that, we bought one mine and two projects in the last 14 months. We just announced 2 days ago another project that we bought in Nevada. I'm going to talk about it later on. But we were able to acquire 3 assets in 14 months. So we are able to do that. We also have a highly profitable asset in Nicaragua. It is one of the highest, if not the highest, grade open pit mine in the world. We are able to produce in our operation over 15 grams per ton of gold. We mix that with low grade material, and we put in our plant 7 grams or 8 grams. So it's very profitable. It's a 500 tons per day operation, but it gave us a lot of cash to continue running the mine without any loans or equity dilution. And finally, we have a shareholder, a big shareholder, that's before people don't necessarily like when companies have a big shareholder, but in our case was great, especially during bear markets, COVID. We were able to get liquidity, support from our big shareholder, Wexford, so we were able to advance many of our projects. So I'll go ahead with the presentation. Our main strategy here is we have a highly qualified team. Again, we have an in-house EPCM team that is able to build a mine from the beginning to the end. We have a cash generating operation. We generated $55 million in EBITDA in the last 12 months with only one mine, 500 tons per day. We are expecting to have a high return in the projects we are acquiring. We have this project in Guyana, Eagle Mountain project, that is going to start operations in 2027, and it's going to give us an additional production of 70,000 ounces per year on average. And then we have a lot of potential in Guyana. It's a new jurisdiction in Nicaragua, and we also have 2 more assets in the US that I'm going to show you now. This is our capital structure. Our market cap is around 380 million. We have 28.6 million in cash. Updated to today, we're around 30. As you see, our acquisitions were very accretive. You can see here. After our first acquisition, the stock went up. Second acquisition, the stock went up again. And our third acquisition, the stock continued to go up. This is in the last, this is in the last 14 months again. So we continue to generate value through organic, but also non-organic growth for the company. So, this is our team, my operation. This is our main operation. Our operation is in Nicaragua, our main mine is in Nicaragua. It's a good jurisdiction. I understand there is some political issues in Nicaragua, but at the level of the mining industry, we've been working very well with the team, with the people. We haven't had any issues, and we've been able to generate from 35,000 to 40,000 ounces per year in the last 4 years that we've been in production. You can see the grade there that I told you is in measured and indicated. We have over 10 grams of grade, which is one of the highest again. This is some of our production results for the second quarter. recoveries, we are able to make a lot of profit with a 38.3 strip ratio. So you have an idea how profitable this mine is based on the grade that we put on the plant. This is a small summary of what we do with the cash. I think it's important to show how responsible we are with the cash. We generated over $57 million in cash in the last 12 months. Then we spent some money in capex. We pay some debt, exploration. We reinvest the money in the company. We even repurchased some shares to add value for the shareholders, and we ended up with 28 million after all that. More numbers here: 120 million in revenues, EBITDA, low cash cost. And this is our second project in Guyana. This is not an operating mine yet, but it's a project in one of the best jurisdictions right now. A lot of people want to go to Guyana. They had a massive oil discovery a few years ago, so they're going to become one of the richest countries in the world per capita. They have a population of 800,000 people, and they're going to be exporting more than 2 million barrels per day. So a lot of money is going to come into the country. Infrastructure is going to improve. Mining projects are going to be financed by the government. Why? Because mining is a very labor-intensive industry, different from oil that is highly automated. Here are some numbers of our pre-feasibility study for our Eagle Mountain project. As you see, we run all these numbers at 1850, and we have an NPV of almost 300 million. We are revising these numbers. We're going to come up with new numbers here. But so you have an idea, if you increase that price, 1850, to the current prices, that NPV goes to up to $1 billion. So we're going to have to review some of the costs as well, because not everything goes up. We have to review also the inflation and other things. But you have an idea of the value of this project just looking at the 1850 and $300 million there. Now, our third asset is Moss Mine. We acquired this also in 2024, July 2024. This is an excellent jurisdiction. It diversifies our portfolio, and it's a project that we bought. It's crazy. We bought it for $6 million because it was an asset that was under bankruptcy. So we were able to take this asset under bankruptcy, pay a minimum fee pretty much. All the debt that the project had was wiped out. We were able to remove the royalties. This project had 5 royalties, 1 stream and 5 royalties on the property. We were able to remove everything but 2 royalties. We reduced the G&A expenses by almost 40%. From 120 employees, now we're planning to run this mine with 6 employees. So the mine was being run inefficiently, and we're trying to change that. So with this mine, we're going to be able to produce another 40,000 ounces per year, and we pay 6.5 million again for this acquisition. Okay. And then I wanted to tell you guys also about our third acquisition. I mentioned that we acquired 3 companies in the last 14 months. 2 days ago, we acquired another project in Nevada, the Mount Hamilton project. This project is from 35 to 40 ounces per year project. We bought it from a Selfish company, which is a parent company. We did not issue any equity to buy this project. We bought this project using an stream. We have an stream now on the property, and royalty, a 2% royalty. So we acquired this company with no equity. That's why our main title for the presentation is with no equity dilution. And these 3 acquisitions are exactly what I was referring to here. So we acquired first Gold Source, March 2024. That's a company in Guyana. Then we acquired Moss Mine here in 2026. We announced the intent of buying it, so the stock went up again. And now on this last part, August, September, the stock is up to 8 right now, 8.2 with our latest acquisition. And this acquisition is particularly interesting because under the gold deposit, there is a tungsten target there with a lot of drilling done a couple decades back. And this is of highly interest for the US government, for defense. The tungsten is one of the I think the previous presentation also showed you another critical metal. Well, tungsten is another critical metal for the US. So they are very interested. We already spoke to the government and they want to develop this project as soon as possible. So we don't discard the idea of putting Mount Hamilton, the project we just bought, in production before the project in Guyana. We're trying to analyze that. We just bought it, so we're trying to see what's the best path to follow. Well, I think that's it. Those are our 4 assets, and we're always looking to continue growing. And our second mine should be in full production next year. So you're gonna see an important ramp up in production and in cash flow immediate next year with most mine, with a mine in Arizona. Okay, thank you for your time.